Did you know that you can buy a company the same way you can buy a domain name for a website? You pay a fee, you pick a name, and you get a PDF. Somewhere in that PDF is an owner. Sometimes that owner is a person, but sometimes that owner is another company, and sometimes that owner is a mailbox in a state or country you've never visited. And none of that by itself is a crime. That is the part TV never bothers to say out loud because a formation clerk is nowhere near as exciting as a James Bond villain on a yacht. But just let me explain. By the end of this, you'll be able to tell the difference between these three things: a legal shell, an opaque shell, and a criminal shell. Most companies that look empty are doing boring legal stuff. They're holding real estate, a ring fencing deal, or keeping a founder's home address off of a lawsuit. The stakes here aren't ban LLCs. It's much simpler and weirder. When the owner is designed to be hard to find, who does that help? And how do you tell privacy from a costume? Hollywood trains you to look for a villain in a tropical suit signing papers on a yacht. Reality is quite different. There are formation clerks, registered agents, and annual reports. A stack of filings that look like they belong in a dentist's waiting room. Now, if you're waiting for the dramatic part, you've already missed it. The dramatic part is the paperwork. Yeah, that sentence sounds ridiculous until you watch an investigator spend 6 months chasing down a chain of LLCs that all share one mailbox. So, a company actually is a legal person. You file a document with the state says, "Congratulations! This thing can own property, sign contracts, get sued, and also outlive the humans who initially created it." That is not a loophole, that is the product. Limited liability and continuity are why businesses incorporate in the first place. The shell is just what happens when the legal person doesn't need a storefront, a staff, or a logo on a truck. It can still open a bank account, it can still wire money, and it can still show up in a lawsuit as the defendant. Okay, now let's go through each shell layer by layer. Layer 1, the legal shell. Holding companies, special purpose vehicles, a company that exists to own one building, one patent, or one deal, then sit quietly. This is normal finance. Banks use them, startups use them, families use them for estate planning. You want the operating company and the real estate in different boxes so one problem doesn't just torch everything. Privacy for a real business is not the same thing as a crime scene. If your takeaway is empty LLC equals fraud, that is a misconception of how companies actually work. Layer 1 is boring on purpose, and boring is often legitimate. Layer 2, the opaque shell. Same filing stamp, but different problem. Now the public record doesn't really tell you who's in charge. It has nominee directors, shareholder services, companies owning companies across jurisdictions that do not share a coffee break or a database. Nobody had to break a law for that stack to exist. The product is opacity. You can still have a lawful reason for privacy, but you can also have a stack that makes a journalist, a bank, or a prosecutor burn a week just to learn the next entity's name. Even investigators will tell you the hard part is not finding the LLC, it's finding the human at the end of the chain. This can take months, even years. Layer 3, the criminal shell. This is where things start getting spicy. The beneficial owner is hidden on purpose because the money, the fraud, or the stolen funds need a costume that looks like a normal business. The criminal shell uses the same tools as layer 1 and layer 2, but do a very different job. The LLC is not the crime. The LLC is the costume. You see where I'm going with this? If you only hunt for illegal companies, you will miss the legal looking ones doing illegal work. That is why shell company is such an interesting concept. The word describes an empty box. It does not describe the real purpose. Let's talk about the mailbox angle here because it's a good one. Delaware, Wyoming, and other formation-friendly states. First things first, millions of totally normal businesses form their companies there because the corporate law is predictable and the process is fast. That is not a conspiracy theory, that is a product market and reality. What you often get on public record is a registered agent address, a commercial mailbox building, a suite number that looks like an office until you realize 400 other companies share it. That is not automatically laundering, that is a feature of how formation works. It also means follow the address, sometimes ends at a mail center, not a CEO. Wyoming gets the same treatment for privacy-friendly LLC marketing. Same pattern, Lawful formation tools make tracing slower. If your mental model of crime needs a villain's lair with a neon sign, you're just gonna walk past the actual problem. Nominee directors are the next piece people don't understand. In plain English, someone else's name goes on the paperwork. Sometimes it is a professional service, sometimes it is a relative, and sometimes it is a person in another country whose job is just to be listed on hundreds of companies. So is that automatically illegal? Well, no, but it's a great way to make the director look like the owner when they actually aren't. Now you're starting to see the entire sales pitch of opacity. The name on the form is a costume. The beneficial owner is the person who actually calls the shots. When you read a filing and feel satisfied because you found a name, pause. Ask whether that name is a human with power or a human with a stamp. Beneficial ownership is the boring phrase that actually matters. It means, who is the human that ultimately owns or controls this thing? Not the nominee, not the holding company, not the PDF. Investigators care about that human being findable. The fight over ownership registries is basically a fight over whether the owner is a PDF is an acceptable end state. Keep that sentence in your head. In a minute, we'll get to what the US actually did about it. Okay, so how about a real example of the infrastructure? The Panama Papers and an investigation into files from the law firm Mossack Fonseca. People heard everybody rich is guilty. That's just a bad joke. And let's start with the facts first. Privacy and tax planning exist. Plenty of structures in those files were about wealth management, and that's all legal. Naming someone in a leak is not the same thing as proving a crime. What the leak actually put on the table was the machine. Nominee packages, off-the-shelf companies, multi-country stacks sold like a fraud product catalog. The scandal was not one yacht. It was how easy it is to buy opacity at industrial scale with a price list and a customer service vibe. That is the infrastructure reveal. Remember the problem? The owner on the paperwork might just be a PDF, a mailbox, or another company. So the US tried to fix this. The idea was simple. Make a lot of companies tell the federal government who the actual humans are. Then in March 2025, that mostly got canceled for American companies. Here's what that means if you're watching this in 2026. If your LLC was formed in the United States, a normal Delaware or Wyoming company, you do not have to file that federal "who owns this" report. Not a first filing, not an update. A lot of 2024 explainer videos still say you do. They are out of date and wrong. A much smaller group is still in the net. Companies formed outside the US that later registered to do business in the US. The takeaway is that one sentence. For ordinary US shell companies, the federal form that was supposed to turn the PDF into a real person's name got taken off the table completely. Opacity did not get fixed. The form just got canceled. So where does this plug into money laundering? Well, let me tell you. In the three-step model, step 2 is layering. The goal is to lose the paper trail. Shell companies, cross-border wires, fake invoices, circular paths. Confusion is the product and the goal. I'm not walking into placement and integration again here. If you want the full placement, layer, integration walkthrough, that is the money laundering episode. Check it out if you want. Here is the only sentence you need from this video into that one. Shells are the one main tool people use to make the middle step look like an ordinary business. Legal shells can sit in a clean deal. Opaque shells can still sit in a confusing one. Criminal shells are when the confusion is the whole point. A lot of what people think they know about shell companies is just wrong. Calling something a shell company does not automatically make it a crime, just like getting named in the Panama Papers is not the same thing as getting convicted. And that viral claim that every US LLC still has to file a federal "who owns this company" form? For ordinary American companies, that rule already got canceled and doesn't exist anymore. If anyone wants to argue about it, cool. Just remember you're arguing with a PDF. So here's my take. The useful question is not, is this a shell? The useful question is this a legal shell, an opaque shell, or a criminal shell? They all have the same stamp, but they all have very, very different jobs. A shell company isn't automatically illegal, but that's kind of the point. Legality is what lets the opaque ones blend in, and what lets the criminal ones borrow a costume that looks like regular paperwork. Once you see the 3 layers, the word shell stops being mysterious and starts being a way to actually sort things out. If there's one thing I want you to take with you, it's this. Don't picture a yacht, picture a PDF. Crime doesn't need a costume that looks illegal, it needs one that looks like regular paperwork. A shell company isn't automatically illegal, but that's kind of the point. Which one is it? Subscribe if you enjoyed this video because I enjoyed making it. See you in the next one.